It's game time, ladies and gentlemen. I got your watch list for June 28, 2019. That is going to be a date to remember. Stocks are going to go crazy. This isn't clickbait. It is because of everything going on. So if you've been watching this, if you were on stream, you could even hear it. I've been excited. This is going to be an important day. Now, watch out because expectations will hurt you. But there is something, either tomorrow could be an event we could watch for, or even coming into next week as there is the G20. So it starts tomorrow, ends on Saturday, and then I'm expecting digestion all throughout next week. But even today showed us some very interesting factors. So I'm going to go over that. I got a very important keys for tomorrow for you guys to watch out for. I got a bunch of plays. We did make a lot of plays today on stream. I'm going to go over that. And if you want to see them when it's live, or you could even go through the recap, we post them there. But we are live 30 minutes before open. YouTube.com/the stock market. Whether you are trading already or you're confused, I don't know what to do, I'm telling you, just come there. We want to see you there, but it's very exciting. The more eyes, the more sourcing of information, the better. So let's get it. And please do not forget the most important thing you need to do right now. Post your watch list below. What are you watching? What are you trading? Give us a context, long, short, options. It doesn't matter. Post it below. That is the sourcing of info. And if you do find this video helpful, you like it, you learned something, do not forget to drop that thumbs up. But let's get to it. So right off the bat, I already have the plays queued up that I want to show you guys. Again, we made a lot, but here are the keys for tomorrow. And I want to explain, because this question came up so many times on stream of what's this with the trade war, G20, all that stuff. But we are damned if I do, damned if I don't. Hopefully you guys have heard that phrase, and it's kind of explaining what's going to happen. And that's why I'm saying, with regardless of what happens, we are in this corner where it is going to create volatility. Now, that I even said it today, and I am even looking, and if you guys have any good bounce plays, post them below. I got puts, so we've been scaling in. We're keeping our eye out for that, but I'm also thinking as well calls too, because that is the definition of volatility. Up and down all the way. But again, considering the climate we have, this is what we're expecting for tomorrow, and even coming into next week. So this is what I need to explain, because a lot of people are asking. The meeting here, it's the G20, the top nations are coming. They're there to talk, negotiate, all sorts of stuff. It's not just for trade. Trump and China, they've used this as an opportunity to say this is where we're going to meet. And again, understand the context. They're choosing to meet there because no side is willing to go and meet formally again outside of that. So, but people are asking, if this happens, what's going to happen to the market if they do get a deal or not. And this is what I want you guys to understand. If there is a trade war, if they don't get a deal, and that is the news that came out today, and we had a little pop here, and this was very, very awkward, and this is what I was already excited before that, but this even shows us right here and what happened today. And even Bitcoin dropped. Go watch the video I made yesterday. I said it's going to come down big. It happened sooner than expected. But this is showing us that we have a very, very unique situation setting up. This is why I'm even thinking we could even get a move and we could see a hint of it tomorrow, because that shouldn't have been the case, honestly. But we could see some tomorrow, and depending on what happens, how that leads into the weekend, we'll see. But next week should have the bulk of the move, but be on your toes and be ready. That's why, man, tomorrow's going to be a Friday. You're going to want to be there on stream, baby. So keep an eye out for that, but pretty much, if they say no, we're not negotiating, make the trade war bigger. And we got a hint of that to kind of balance expectations from Lighthizer today. But the trade war is bad for trade and the economy. UPS or FedEx just sued the economy. You're seeing it in the earnings. We even saw that with Micron, said they do a lot better without the trade war. All these companies are explaining it. Even look at Nike today with earnings. So that's why the market wouldn't like it, because we've already seen the negative effects of this and how even further escalated could do damage as far as just the basic data of literal trade with companies doing business and how that affects stuff. So that's why if it happens, the market will react negatively, but not too negatively, because guess what? We're already there. And some people said the best thing that as once you get rid of the trade war, markets just want certainty, and that is the point. But this is why we're damned if we do, damned if we don't. Because sure, if there's no trade war, that would clear up some of the air if they're saying, or no trade war, deal's done, okay, we're good. Or if they say, no, we're escalating this. If they escalate it, okay, now we know the situation with the trade war, but the certainty we saw with the Fed policy, that goes out the window, and that is the problem even for Fed credibility, which even in the longer run beyond what happens this weekend could be very, very crucial. Pretty much a misstep at this event could change a lot for really the next 12 months. So that's that aspect of it. But now, let's say they do get the trade deal and they're saying, okay, everything's good. That's now bad. And I say now because people wouldn't have expected that, but that's until we had the Fed and then we saw what's happening with the bonds and everything we've been discussing, because everybody thought we were getting rate cuts for Christmas. We thought that was going to be the gift. Donald Trump wants it. Everybody wants it. But now Powell made it very, very clear, if those external factors like the trade and all that go away, they're not cutting rates. But now the market thinks they're cutting rates. So this is what I'm saying. If that reverts, that's still going to have an effect on the market. That's going to create volatility. It doesn't have to be, again, it could either be down or up. That's what's crazy, because this is just going to create volatility. And this whole damned if we do, damned if we don't, it reminds me of the down Friday, down Monday that we saw, because even that down Friday, down Monday, it looked weird, kind of like today. It was only the Dow was green and everything else was red. But today, everything was green and the Dow's red. But that is showing you volatility. That is showing you uncertainty mixed in with all the other factors. So this is where it gets a little bit crazy. If you guys watch my video, I said, how to predict the stock market crash. Really, it's going over the yield curve. But the problem is when rates get inverted and then normalized. But this is what it came to my mind earlier here today, that if there is the trade deal and these expectations do change, it will kind of be an artificial rate cut. And what I mean by that is that that could now, if bonds go from low, they're coming down, and then it steepens again, it just starts going all over. Pretty much it goes from inverted to non-inverted, but not because of the Fed. That could be an artificial problem. And again, we've already heard Powell talk about these other tools he wants to utilize. And honestly, the political jawboning could actually be one of those tools. So that should explain it for you guys. Keep that in mind. Let's get to the plays. I made a play on this today. I remember I wanted it earlier, and the thing that happened today, again, you see the Dow was down and everything went up. We saw this middle of the day, a lot of Dow stocks just started plummeting, and I have a lot of them here because these are the ones I want you to watch. And we did, like I said, we made a few different plays, but I ended up getting a Caterpillar on here, but I scaled in on it very small. I just wanted some crazy exposure for tomorrow. And if you remember, we were talking about this a lot yesterday. I have a $130 play already for August on it that I did with the spread. And, I want to even get more. And I even said once the data and everything kind of starts to become more clear, I'm going to start getting ready to play really heavy here. But, I want my hand in the cookie jar, and I want to start getting the timing, and I want to see how things are changing in value. But I grabbed a weekly on the Caterpillar. I grabbed this one right here, a 132. I bought it for like $8. I just want to see what happens tomorrow with it. But I'm getting my hand in the Dow components. I really like them. So watch Caterpillar, though. Watch as it either leads or lags the market. Next one I got was Goldman Sachs, and I played a July on this right here. It only cost me $83 net debit. And I went over it on stream why I went with July. I would have preferred more time. But again, with kind of the nature of this, the Fed is responding to banks. And now here's what happened today. We saw even moves in oil. While even the market was doing good and nothing else it didn't seem like it was affecting it. Oil started to come down, but first it was the oil companies, and then you saw the banks react. And that is something, I've talked about this in the CLO video. Banks have a lot of exposure to energy loans. The price of energy goes crazy. There's defaults there. That's just as risky. If not, I think they have more leverage in those loans than real estate or anything else the higher or lower rates would affect. It's the sustainability of the companies that they've loaned to, and then the collateral that they've loaned against. If the oil has issues, that's not good. But we got that play. Like I said, I bought the 187 and I sold the 182. I bought it for $206. I financed it by shorting this option. It caps my gain. Even though I'm short, I minimize the risk because I'd be in the money here. I spent $206 on that option, sold this one for $123, $83 out of pocket. But now I'm decently in the money. I believe that's even not even a beyond a one standard deviation move. But watch them and watch the banks. They're going to be important. But again, Goldman is one of the 33 Dow components. Next, Triple M, 3M, they dropped again. And this was one of those in the mornings that was moving, and it started to have its little move. I'd keep my eye on that as a bellwether. It's kind of like FedEx, kind of like UPS, and even Intel, which we'll talk about. They've had bad guidance. They keep cutting down, multiple cuts down. Watch again here if they're not looking strong, and if they do start to lead the way down, people are already worried on these companies. So again, same thing with Intel. It kind of looks just like 3M. And if you've been seeing what's been happening with these chip makers, Intel is really sticking out as a sore thumb, but even they got hit a little bit harder. So watch those. If they do make moves and we start to even get confirmation, these lower volatility plays are going to be the good ones. Caterpillar is a lot harder to play though, so be careful with that. IBM now, I played this one because literally I wanted this right at close. It just started dropping and it looked a little bit better, but IBM falls in that same category as 3M in that they've done a little bit better, but pretty much I'm saying they fall in that category because they're kind of similar. You know, they do have a cloud sector of their business, but I'm worried that they will actually be the next ones to get hit, and that's not a good move. So I like that. We did play a play on it. I did that one here. I got the 134 July 5th for 29 cents. And we got to talk about Boeing on that one too. So don't worry. I'm going to show you guys how to play Boeing tomorrow and what I'm expecting. But I got that IBM. IBM didn't, even though that move, the velocity wasn't too big, you'll see why did I play a weekly on Boeing? Why am I going after Caterpillar on the weekly? And then I get a July 5th here. I preferably would have got more time, but I didn't want to do a spread. I just wanted small exposure. So I didn't want to cap any gains, but the key, I need to get close to the money. That's the only justification for buying these weeklies, because if there is volatility, there's going to be large dollar movements. You want to get in the money for a cheap price. So that's even a big key for tomorrow. If you do get big price moves and we see high volume tomorrow, you want to get near the money. If not, you get time on it and you could get a little further out the money. But that's why I'm even using these spreads, because I want to spend a little bit amount of money but get close to the money. That's hard if you're buying it straight up. So that's why I'll buy these ones and then sell these to lower the difference, but I'll cap the gain. I'm fine with capping my gain as long as I'm limiting my risk and still getting a higher probability exposure. So watch those. Watch IBM. I like that one. And lastly, I've already went over all those. So next one is, we have Medtronic. There's three. I'm going to start with Boeing because I'm going to tell you guys this. A lot of people were confused. Bad news in the morning. You guys could go look up the news. There's all sorts of it. But I'm telling you, if you've watched this is the exact same movement. Damn it, man. You can't even go back on the 14 days. This was the exact same movement we saw here. Remember, it dropped, but then it went green. So we were kind of green until that last news. But watch out for something like this. It could drop and hold up, and that's what you have to be careful for. I put it out on the stream alert right after the first drop, seeing how it was moving with the market. I said it's going to bounce here. It'll probably cuck the rest of the day and not do anything, and if it doesn't break those levels, the stock has support. Go watch my buyback video. And you're like, who's doing this manipulation? Oh my God, buy Bitcoin. Blah, blah, blah. Go watch the video and understand. I'm telling you, the filings will open your eyes. If it is manipulated and you know how they're going to manipulate it, is it really that manipulated? I don't know. Maybe I'm manipulating your thoughts right now. Who knows? But watch for this tomorrow. But here's going to be the key of what we're looking at here. It's going to do that move. It's either going to drop big in the morning, and that's going to be our moment to take it, and then it will cuck. But if it breaks key levels, then it could be a little bit bigger of a day, unless you really start to see it look like this, where you're literally, it stalls and then comes down, little bounces, and then it starts breaking through support like butter. That's the only way you're going to get big moves on it. But more likely, we're going to see a big drop, maybe like this. It'll come here, drop, maybe even the second drop, but then it'll bounce and then stay in the middle. So watch out for that, because we played the weeklies. We did it twice, and now you could see what happened. And I said they were risky. I did all these trades on the stream. So again, this is why you're going to want to be there. And if you missed it, these were all on the stream alerts. But we saw the news. We caught it pretty good. Look at 333. No exaggeration. This is why you want to be on the stream. We got that in the literal first minute of that drop. We were some of the first people to pick up on it. So that started to go down. I got the weekly at a decent price. And again, what happened, I was actually, if you even saw, I had these at 15. I was so early. I could have got the $5 closer for 15 cents. I should have market ordered it, even though it's kind of risky. But I got literally by one. I can't believe I've never seen that on a 1 cent not filling me like that. It was crazy, but that's the volatility. I had to cancel it. I had to act fast. I went to these for 20 cents a pop. Those were the 345s. So right here, and they came down. So, got them at 20. They did shoot up to like 28, and they were moving a little bit weird. And again, this is the weekly. That was such big velocity. It was $3 in 1 minute. And we talked about this yesterday. That's why I went after the weekly. But again, I didn't like how far it was out, because you could tell even after it made the move, these ones weren't moving as much. So then we got into it, and then what happened? It bounced, and I didn't like it. And I was saying, all right, man, I wanted to get some of these cheaper, because remember, we played these yesterday, so I'm still holding the 340s. We bought these for 27 cents yesterday, or 20 cents. It's 20 to 27 cents, or 23 cents. And even on that move, it shot back up to $1 and then came down at the low to like 50 cents. It was still 100% premium than what I paid yesterday. These still were holding some of their value. The only thing that decayed and really got cheaper were these weeklies, so they were going to be more susceptible. My idea is try to get near the money. So again, I even said it. You guys see the time. Go watch the recap. You could literally watch this live, and I'm running through the mindset, because I was like, dang, I didn't want that trade. I got screwed over on the first one and I had to maneuver it, but I did take a risk. I said, I'm about to throw $100 on it when I only wanted to throw like $30 in the beginning. Then I chased for 40, and then now I averaged down. I usually wouldn't do this, and again, I hate averaging on the weekly because it wasn't even a weekly. This thing is expiring tomorrow. But again, I said, considering the news, and that's what I'm saying, Boeing, you guys, that's why I said even tomorrow, it's either going to move in the morning or at night. But I even said it too on stream, even on the stream alerts, by the next week's holding up their premium and still going up from yesterday and holding that, all of the longer-term contracts were pricing in the fear. These ones weren't because, again, it's kind of expected. They could probably hold it up one more day coming into the Friday and considering all the events. So what I do, I went closer to the money by $15 now because remember, I just want to get close, and I picked these up for what, 35 cents? Yeah. So I got those about 17 minutes later, so at 350. So like right around there, it started to drop, and that's the crazy part. Think about it. That and it's showing you time to gate. It was dropping, and I caught it before it really got red, but even then it started coming down again, and I was able to get those at 35 cents. And this is the point. That's what I'm saying. The strategy on these 35 cents when they were just going for $1.40 or $1 not too long ago. So it came down. That's going to be an exciting play. Again, we have the July 19th, we have the July 7th, and now we have these weeklies. So we're just going to watch how all those play out. But I think it's going to be a good one to play for tomorrow. And again, just be there either morning or at the end because that's really where I think it's going to move unless we get a formation like that. So watch that. Another one. This one was awful, man. We alerted this one out. We saw it. Shout out the chat too, man. Again, people, man, you guys are bringing some awesome plays. And as you see, so many eyes, we could work through it. I wanted it, and I was like, nah. They had a pretty much Howard Hughes rumor of them getting bought out, and this is the sad part because I was making fun of this guy. He bought it at like 85 cents, and I was like, oh, this guy's retarded. Like, no way it's going to go there. We saw it when it was only up 10%. It moved up another 30% throughout the day, and I said, I even went out here, man, or it was the August. Oh, man, I don't even want to look at it. Actually, there you go. So now you guys see I'm not lying. Literally, you could even see the time. I got cheap with it, and I was trying to snake the option chain so you could see from 9:49, so like right around there, man. So, man, if you guys are saying that, chat, we're not getting that news early and fast. You see, that's why people want the stream alerts if they're not there. That's why people are coming. We're on it. But again, you even see pricing, and I botched this. I didn't get to play. It would have been 1,000%er. These were that first ones. The guy, or I think it was the July 120. These guys had it. He wanted it at 80, and I thought I could snake the bid and get him at 50. I even put 75 cents because somebody stole it right away. It was crazy. Then these Octobers, again, they were going at 75 on the ask. I put 60 there. And so what were they? October 125s. Oh, man, that's crazy. October? Jeez, bro. These are 75 cents. And they shot up to $11 at the bid. So you guys can see, man, I'm mad I didn't get it. That's because that's what happens when there's wide spreads, and that's why they spread it wise, It's good being cheap, but you see where it could hurt you sometimes, but still pretty cool with it. But that's going to be a good one. And what I said, wait till the hype dies down. Hype will die down. We'll see what could happen with it, but that's going to be a cool play. A lot of eyes are on it. And then Medtronic, I played this. I got the weeklies, unfortunately, because they got FDA warned that their pacemakers or their insulin pumps, something like that, could get hacked, and it dropped. It seemed really, I was more reactive to the price action, and then the follow-up news was good. They were already getting hurt, but I grabbed these right here. Oh, I got worried. I got these 95.50s for 21 cents. Again, they dropped in half, and that's why I didn't want to average on those. Those are probably going to be a loss, but watch it. If it does happen, and if there is a move in the morning, I'm going to just try to salvage it ASAP. But again, it's a play you could watch, and these are the ones we've done. Next, again, we have the Nike earnings too. Maybe I'll start with that too so you guys could see. We made the play, and I did a butterfly. I did something a little different. I spent $110 both ways. They all expire tomorrow. It was simply playing earnings. We talked about the expected move on the option chain was about $3 or $2. And I thought it could move around $4. So I was like, all right, I didn't feel it at first, but it made a little bit sense. But I was also more bearish given, the quarter, the climate with everything. And it seems like the trade war and anything would have more of a negative effect than they surprised like Micron did. But either way, that's why I went both sides. So I did a smaller butterfly that was weighted equal. You buy 4 calls, sell 8 in the middle, buy 4 more to protect. I bought at 86, sold at 87, bought at 88. Pretty much as long as by tomorrow I will get paid out 10 times, and I think I put like $30 or $40, so I'd make $300-400 if it closes at $87 or lower. Lower than 87 but higher than 86. But then I wanted the puts as well, and I widened the spreads. You can see it's not a dollar difference. I widened them by $1.50 instead. But what I did, I grabbed the 1 put, sold 2, but then I bought 2. So this wasn't a balanced butterfly. I spent more money to get more exposure to the downside because, again, I said if it does go down and it goes below, that's the thing with the butterfly. If it goes lower than your top, so if Nike goes past 88, I would actually lose instead of win. You only win if it stays in the middle. That's why it's less money down, but very much lower odds. You have actually statistically better odds buying a single contract by itself because these are harder to hit. So that's why I said, well, if there is any surprise to the downside, the option chain was pricing in $2. I knew it could move about $4, so I got extra puts on the downside, and then we saw what happened with it. It was kind of all over the place with the earnings. But at the end of the day, it moved literally about $4 down on the downside, came back up. But again, all that matters is where it's at open, and you guys will see how that changes. So that'll be a good one. We'll see those butterflies. The next ones, these are the ones, FedEx, keep your eye out with that, in transports. Oh, and I made a play on Philip Morris as well. I want you to look at this. It's Altria is selling, and you could see these stocks are not looking good. Even if you just compare them to the market or anything, something's up with it. There's a big divergence. So, yeah, they could come down, but I think, again, there's political risk and all this stuff being said. So I got to play on there. I got a July 5th 75 put for 35 cents. I wanted something small in there, again, trying to get closer to the money, but those are the ones to play. But if this does start to develop, I'll probably do a spread and try to set up something bigger, but it's kind of reminding me of Molina. There's something going on with Philip Morris and Altria and all that, so I would keep an eye on those. There's that, but going back, the bounce plays, I put these out, and I told you guys there is bounce plays I'm looking for if they do hold up. NVIDIA and UNH, and even Microsoft will be a great bounce play. So again, if you know any better ones, but I said, if you guys remember, I said watch these 250s, but this is the point why it's better to wait. Remember, they shot up. They were at that $30 price. I said wait a little bit. They shot up to 70 cents, but now they're back in cheap. So even though UNH did bounce, this is how frogs get set up, my friends. Look where it was, but that crush there didn't help. But if UNH and healthcare diverge from the market, those could be a good one to watch. So I like that. Even the NVIDIA too, I told you guys my price on it, and I was pissed off because sadly, it was crazy that sadly yesterday was the cheaper price on it. I wanted these 165s at 30, if you guys remember, and it hit it again, and it shot right back up to 90. But this was the play I brought up yesterday. So I want to see this come down, but if it does get ready to bounce, that could be very, very good. And again, but we're going to need the chip makers to be moving on there. So there's that. Lastly, Google and Facebook. Google was acting weird today and selling off. So was Facebook. But Facebook, I played both sides, calls and puts on it, on both the weeklies, just because of I'm thinking if Amazon and anything develops and then it gets any pressure with Google, we're seeing Twitter and some other social media stocks, and Twitter's moved today, and that's something I want to see if there's a follow-up or if Trump attacks them. But they did this change with political tweets, and it could be a positive. It's a very, I think, lukewarm situation. There's good and bad about it, but if it does lead to any issues with any of the social media stocks or even like Facebook and how it relates to politics, again, think elections and where that whole scandal with Facebook even started, politics. So if that gets, if that anything develops there, even with Twitter, Facebook could get drawn into it, but Google's going, it's already looking weird. We grabbed puts on it yesterday, and again, comparing it to FANG, it's looking a little bit different, if you could see that so far. Even Amazon, and Amazon's looking very great. It's kind of a bellwether, but something's up with Google. You could see it in the volume. I have broken legs on it that I still need to fill. Those are going to come back. I'm really down on those. But then I also have the newer plays and spreads we got yesterday. But that is pretty much it, man. We have the strategy, push it to the wall, and frogs. Go search this on this channel. You will find them. But we're going to talk about this tomorrow. You guys are going to want to be in the game. And let me tell you this. Don't forget digestion. There's a lot to look at. We could be very, very excited. I am excited. But if tomorrow doesn't present these opportunities, we just push it back one more day. I'm telling you, do not blow up your account on weeklies here. You have one job. Stay alive till next week. And staying alive does not help if you're extremely wounded and down. It's going to be bad for your morale. It's going to be bad for your account. You got to be very disciplined. If you see stuff tomorrow, you want to act. You make a play or two in the morning, take advantage of that, or you wait till the end of close and do something there, or you just limit the dollar amount you're playing and do not go crazy, or make sure you're getting time on there. Do not get overhyped. Just because we're bringing energy, that does not mean get hype. It does not mean get FOMO. It means stay awake and keep your eyes open, and this is all strategy. I missed out on the Howard Hughes. It's okay. I want to save my money because Howard Hughes, I'll miss one of those to hit 20 of them next week. And if next week doesn't set up for that, we're going to wait till another week. Again, be patient with it. Control your expectations. Respond to what the market has. I said this in the beginning of the week, ladies and gentlemen. It's better to be late than wrong in this case. So keep your eye out for that. I better see you on stream tomorrow. And let's go!